Champion Iron, CIA on Toronto Stock Exchange. This is a barn burner. This is a tough one, a fun one. I think you should own a little bit of it, about a 1% or even a 0.5% in your portfolio. It's definitely higher risk, but it's not spec either. So let me try and explain that. First of all, let's just give you a little background. It's iron ore company in Quebec, and I got some stats here. This is right off their website. So let me just read that to you, and so you can get a good background on it. And I think it's really worth your while to actually listen to this. 1 second here. Okay, here we go. I'm up to date here. So tier 1 jurisdiction, obviously Quebec. So we're not talking about Africa, which is typically geopolitically very dangerous. Middle East is dangerous. You get Canada. It's about as geopolitically safe as you can possibly get. Established production in the region since the 50s. Second largest hub of high-grade production globally. Access to infrastructure. That's a phenomenal start. $4 billion's been invested. I don't think they mean in the company. I think they mean in the area, because the company's invested capital is not quite that high. Short-term opportunity to double production. High grade, 66% iron with low impurities. 20-year plus mine life. It's unbelievable. Proven management, 10% plus insider ownership. Awesome. Current realized price is $100 US per ton, and the cash cost is only $40 US per ton. I mean, that's a great start. That's just getting the basics of the company. Let's just take a look at the iron ore price. My next slide there. There you see it's a, was that a 5-year chart, I believe? Yes, 5-year chart. So it's kind of at a high. We're getting demand really from around the world, but China especially. This is such a good grade that it's actually more environmentally friendly, just because it's reducing emissions to have this high quality. So you always want quality, right? Like, I don't know, it's just so simple. Buy quality in everything you do, right? Not just stocks. Okay, let's look at it in our model. Gonna move things around a little. I swear I'll be with you in a second. There we are. Okay, off the chart improvement return on invested capital here, right? Just unbelievable, and put capital to work. You know, just in 2016 there was 79 million of invested capital. There's now 700 million. 10 times as much capital put into this company. Now they said there was 4 billion in their presentation. That didn't mean the company. It must have meant in the surrounding area, infrastructure, and things like that aren't really part of the company, but they said they have access to infrastructure, which is great. It is a big impediment sometimes in mining, right? Because you go to these remote areas, well, how do you get the stuff out? Well, they have that problem solved. So you see the return on capital is 57%, and we are very conservative in the way we calculate our return on invested capital. All right, let's look at the financials. If this doesn't do it for you, I'm not sure what would. Revenue is now 277 million in the latest quarter, the June quarter. That's an 84% rise from the same quarter the previous year. Okay, EBITDA went from 39 million in last June to 147 million this June. Okay, so everything sounds great. Even our valuation, you see, is off the chart. I mean, it's an what, 6 times, and it could be better. Like I lowered our growth rate. The growth rate could be much higher. The stock has ran up and come down a little bit recently. So there's where we're getting the risk. Okay, so it really seems like the operations are, obviously firing on all cylinders. It's fantastic. The issue is it sustainable, right? It certainly seems like it. 20-year mine life, You don't know what the price of iron ore is going to do, though. Yes, it seems like, you know, China's building. You know, construction seems to be everywhere in the world right now. Right here in Toronto, it's all over the place. It's high grade, so you know, there's a lot of good check marks for sure. Anytime a stock runs up like this, it's up, you know, 106% on a 3-year CAGR basis. That means 100, and then 100 on top of that, and then 100 on top of that. And you can see the spike in the chart, and it has come down a little bit. So it's really a, you know, a valuation / trading risk that you're facing. I mean, this company, I don't think is going away. I don't think it's suddenly just gonna, you know, not produce iron ore, and the price of iron ore is not gonna, I doubt, cut in half or something like that in the near future. But all those things are kind of possible, and you kind of gotta have that in your head. So I just don't want to make it sound like a layup. Like, you know, some of our companies are consistently year in, year out, just good return on invested capital. This is not that. This is it's a semi-startup. It's actually, I think it's been around. I think it was just, you know, amalgamated from other companies. You know, there's a lot, you know, there is more history here than our chart would show you. But as Champion Energy, you know, we only have a few years history. So sustainability is still a question. There's no doubt. You got to be aware of it. I'm trying to overemphasize it. So the way to play it, I always try and give you at least a strategy to play it. And to me, because of the trading / valuation risk, you can't go much more than 1% in your portfolio. Now, it literally, this could be a 10-bagger, okay? And that's fine. You know, once it goes up and you're playing with house money, and maybe it becomes 10% of your portfolio just because of stock. That could happen. Okay? It could also be this iron ore price is not sustainable, you know, and it crashes out and you lose half your money. Like, it could really happen. And it's that crazy. That's the way it is. But I think it's worth it. I would definitely put in like 0.5% to 1% in a portfolio that's well diversified. I think it makes a ton of sense. Champion Iron. Thank you for watching our investment video. This is the same analysis we provide to our institutional clients. Want to improve your portfolio? Simply subscribe to our YouTube channel below, or better yet, go to our video website at video.fsavaluation.com and get access to the entire library.